In a shocking turn of events, nearly 100 cryptocurrency projects have abruptly shut down amid a market crisis, leaving investors in turmoil. This unprecedented wave of closures raises urgent questions about the future of the crypto industry. Here's what you need to know. On July 31st, 2026, the cryptocurrency landscape faced a seismic shift as nearly 100 projects announced their closure, impacting major exchanges, decentralized finance, DeFi services, and NFT marketplaces. This wave of shutdowns began to unfold earlier in the year, but the full extent was revealed today, with announcements pouring in from various sectors of the crypto market. By noon, reports confirmed that significant players, including decentralized finance platforms and NFT marketplaces, had ceased operations, leaving thousands of investors scrambling to secure their assets. The closures followed an ongoing market crisis characterized by Bitcoin's price struggles, which dipped to unprecedented lows, along with Ethereum's decline, both of which have shaken investor confidence and raised questions about the future of digital currencies. The most shocking aspect of these closures is their sheer scope. All areas of the crypto market are affected, marking it as one of the largest simultaneous shutdowns in the industry's history. This event is particularly significant as it differs from previous downturns, where only select projects faced closure, indicating a more systemic issue within the crypto economy. Analysts point to regulatory pressures and rampant speculation as key factors that have exacerbated vulnerabilities in the market. Additionally, the collapse of several high-profile exchanges earlier this year had already set a troubling precedent, eroding trust among investors. The immediate impact of these closures is profound. Thousands of investors have been left with stranded assets, while many employees within these companies face uncertain futures. The ripple effects are expected to extend to ancillary businesses that rely on cryptocurrency transactions, further destabilizing the ecosystem. Experts warn that this may lead to a significant contraction in the market as liquidity dries up and new investments dwindle. Looking ahead, industry leaders must navigate this turbulent landscape with caution. While some analysts predict a potential rebound in the longer term, driven by innovation and regulatory clarity, the path to recovery is fraught with challenges. Stakeholders are now calling for greater transparency and accountability within the sector, as the need for sustainable practices becomes more urgent. As the dust settles, the crypto community must reassess its foundations and consider how to rebuild trust in a market that has been shaken to its core. The closure of nearly 100 cryptocurrency projects today marks a critical juncture in the industry, with immediate consequences that extend far beyond the affected companies. This abrupt shutdown is not an isolated incident, but rather a reflection of a larger trend within the cryptocurrency landscape, characterized by heightened volatility and increasing regulatory scrutiny. Investors are feeling the impact acutely, with an estimated 200,000 individuals directly affected, many of whom have lost significant sums of money in a market notorious for its unpredictability. The economic implications are dire. As these projects shutter, the overall market capitalization of cryptocurrencies has plummeted, resulting in a staggering loss exceeding $30 billion in value within mere hours. This development raises alarm bells for regulators, who have been closely monitoring the cryptocurrency market's stability and integrity. Governments worldwide may feel compelled to impose stricter regulations to protect investors and stabilize the market, a move that could fundamentally reshape the industry. In the United States and Europe, lawmakers are increasingly vocal about the need for oversight as they grapple with the implications of a largely unregulated financial ecosystem that has drawn in both seasoned investors and newcomers. For the average person, this crisis underscores the inherent risks associated with cryptocurrency investments. Many who entered the market hoping for quick profits are now facing harsh realities, highlighting the urgent need for greater awareness and caution in an increasingly volatile environment. The fallout from these closures may lead to a profound loss of investor confidence, a sentiment that could take years to rebuild. Furthermore, the closures may inadvertently prompt innovation as remaining players strive to differentiate themselves in a more regulated market. Projects that can demonstrate transparency and compliance may gain a competitive edge, while those unable to adapt may face extinction. Looking ahead, it is crucial for investors to conduct thorough research and understand the underlying technologies before committing capital. As the industry evolves, only the most resilient and compliant projects are likely to survive, potentially leading to a more stable and mature cryptocurrency market in the long term. The coming months will be pivotal in determining the future landscape of the cryptocurrency industry. The trends leading to today's mass shutdown of cryptocurrency projects have been brewing for months. Since the beginning of 2026, the crypto market has been in turmoil due to regulatory pressures, rising interest rates, and an overall bearish sentiment. Many projects, particularly in decentralized finance and NFT marketplaces, struggled to maintain their user bases and revenue streams amid a decline in market confidence. Over the past year, nearly 100 crypto projects have already shut down, signaling a troubling pattern that raises alarms for investors and innovators alike. The regulatory environment has tightened significantly, with governments around the world introducing new laws to combat fraud and protect investors, creating an atmosphere of uncertainty that stifles innovation. Investors, who once flocked to cryptocurrencies for their perceived high returns, now face a stark reality where the risks are becoming painfully clear. Past downturns have been localized, often affecting singular companies or sectors, but today's closures are widespread, indicating a systemic issue within the industry. This shift suggests that key players are reassessing their positions in a market that no longer guarantees success, leading to a cautious approach to investment. The ramifications extend beyond individual projects, impacting job security within the sector and eroding public trust in digital currencies. Looking ahead, the future of cryptocurrency may hinge on the industry's ability to adapt to these challenges. Increased regulatory scrutiny could foster a more stable environment, but it also risks stifling creativity and innovation. As the market recalibrates, it will be crucial for stakeholders to find a balance between regulation and growth. The ongoing evolution of cryptocurrency will likely define its trajectory as the industry strives to regain the confidence of investors and the public alike. In the wake of today's mass closures, the cryptocurrency market faces a pivotal moment that could reshape its future. Major exchanges and projects have shut down operations, causing widespread panic among investors. This wave of closures is largely attributed to increasing regulatory scrutiny, market volatility, and a lack of consumer trust. Historically, the cryptocurrency market has thrived on innovation and decentralization. However, recent events have exposed vulnerabilities that challenge its foundational principles. As regulators worldwide tighten their grip on cryptocurrency, the potential for stricter guidelines looms large. These regulations could provide a framework that fosters stability and security, potentially leading to a temporary rebound as investors regain confidence in a more structured environment. Conversely, if investor sentiment continues to deteriorate, further declines might ensue, exacerbating the crisis and leading to additional project closures in the coming weeks. The current bearish trend has raised alarms among experts who warn that if left unaddressed, it could have far-reaching implications beyond cryptocurrencies. Financial markets, traditionally sensitive to shifts in investor confidence, may also take a hit as capital flows adjust to the changing landscape. The potential for contagion in associated sectors, such as blockchain technology and digital finance, raises alarms about broader economic repercussions. As the dust settles, a critical question remains: can the cryptocurrency market recover from this wave of closures, or is this the beginning of a more extensive collapse? Investors should remain vigilant for government announcements regarding potential regulations or intervention strategies in the near future. The next few weeks will be crucial in determining whether the market can stabilize or if it will spiral further into uncertainty. The industry must adapt swiftly to regain trust and navigate this tumultuous period effectively. As we ponder the future of the cryptocurrency market, what do you think will happen next? Will we see a recovery, or is this just the beginning of a larger crisis? Share your predictions in the comments and subscribe for daily deep dives.